we may actually be witnessing the largest economic upgrade that an entire continent has ever seen. What I'm talking about is South America, but more broadly, entirety of Latin America. Studies are showing that there is massive adoption for digital financial products and e-commerce solutions. Just think about this for a second. Let's just dive right into it, okay? The number of fintech startups that have actually started in Latin America since 2017 has more than tripled. But even more than that, just from the years of 2020 to 2021, the amount of venture capitalist dollars that actually poured in to invest in these companies 4x'd in the matter of a single year. One of the largest winning companies out of this big change was Nubank, one of the three main companies that I've been following and that we'll be talking about in this video. During the initial public offering for Nubank, they saw support from every single large investor that you could possibly name. We're talking about the likes of Sequoia Capital, Founders Fund, Goldman Sachs, Tiger Global, Tencent, Berkshire Hathaway, and even JP Morgan Asset Management. But don't take it from me. Here's Fede Sandler, who at one point was the head of investor relations for both Mercado Libre and Nubank. Oh, and by the way, he actually led the investor relations team on Nubank during the IPO stages.
So there was a lot of pre-engagement, sort of like prepping the game even before launching on the IPO and the roadshow. So I would have probably even before we started, working on the F1 and whatnot, maybe 15 meetings per week with all of these investors, including Berkshire, including Bailey Gifford, T. Rowe Price, all these large investors. Fortunately, I think there was a confluence of two things as well. Number one was that 2021 was a year where interest for high growth tech names was off the charts. And you saw all that IPO pipeline in that year, which I think it worked to Nubank's advantage in terms of attracting, the right investors. But there was also a question around Nubank being actually like a premium fintech business, and we can discuss about that, but because it has really sustainable advantages around pillars like cost of funding and cost of acquisition and cost of risk that really make it different even within the fintech space.
So why are all the best investors in the world all trying to pour their money into Latin America? Well, let's look at a comparison between the American e-commerce giant Amazon and the Latin American e-commerce giant Mercado Libre. Now, looking at Amazon 10 years ago, roughly 2013, the stock was actually at $120 billion market cap. 10 years later, massive growth, 7.8 timesing their money all the way to just over $1 trillion. Mercado Libre, on the other hand, going back to 2013, was only a $4 billion company. Today, $65.5 billion market cap, which represented a total increase of 15.4 times. This is almost exactly a doubling in the value of your dollar, how far it would have went if you would have invested in the Latin American counterpart. It can take decades to refine a business model the way Jeff Bezos did for Amazon, but it can take much less time to replicate that business in other geographies the way that Meli did for their own geography. And this same sort of trend can be spotted no matter which Latin American company that you're finding and their American counterpart. Let's check back in on Fede and his opinions of how Latin American companies have actually perfected the business model of what the original American companies should have done.
But then there's a whole fintech angle that Amazon, yes, they have explored because they lend to merchants, they have a credit card. Meli built a PayPal within Mercado Libre, right? Amazon was not able to do that, right? That is the biggest difference that I see to the American counterparts relative to in e-commerce. I think on Nubank, on the other hand, that company gets more compared to the likes of Square and Stripe, although they're not completely the same. But like these American counterparts, I think Nubank provides a wide array of financial services. But Nubank is unique in the sense that it was one of the first companies in Brazil, like I said, to offer a no-fee credit card. And this allowed them to basically attract a huge user base at an extremely low CAC and create this halo effect that enabled them to become one of the preeminent, fintech companies in Latin America.
Now, let's just get a little bit nerdier as we talk about the statistics of these four main topics that cover why I believe Latin America will be a great geography for me to invest in. Now, starting off with population growth, where the United States actually hung around a population of 336 million people. Well, in the same time, Latin America and the Caribbean actually raised their population up to 670 million people. Now, this means roughly that there is about 2 times the amount of people in Latin America. But the craziest part is that there's an assumed roughly 200 to 300 million people that are still considered underbanked, or the large majority of their actual transactions are still done through cash, due to all of the real lack of competition and very stringent high credit requirements. This obviously leaves a massive part of the population to be gobbled up by some of these new fintechs that are coming in without any real competition to step in their way. Now, to be fair, one of the biggest critiques is that obviously if they are underbanked or do not have that affluent status, this is that really they're not going to have the same level of impact going to those banks as they would in the United States, especially whenever you look at the GDP differences between these two areas. Although there is very many more customers, those customers aren't worth it as much to the banks considering how much less they actually make. And this brings us to smartphone usage. That although these people might not be as affluent in Latin America, this does not stop them from having a great deal of smartphones and broadband access. Still growing on a percentage basis in the high teens, this is still exploding and expected to gain over 200 million new connections by 2025. That leads us to 70% of the overall population having a smartphone connection in Latin America. And now this compounds greatly with the growing middle class in Latin America. See, the median age in Latin America is roughly 31 years of age. All of these people are working very hard to secure their family's future, and it's actually working out quite well for them. And with that comes a lot of benefits. A young, tech-savvy individual who's looking for new digital financial products and e-commerce solutions. And this group of people that can call themselves middle class roughly makes up for about 270 million people in Latin America. Which leads me to the last point, and definitely not the least, the total addressable market. The head of international investment at QE Bill Salufo, actually said that Latin America is poised to be a global leader in the digital banking space. And Nubank, being the largest fintech in the world in terms of customer count, seems to agree. And they also say that the total addressable market is roughly $270 billion currently in Latin America. And the total addressable market in e-commerce solutions are quite the same at roughly $271 billion. But the growth rates expected for all of these major countries just added up to 2025 is expected to grow to $574 billion. And this is expected to continue to grow. Think about this. Before the pandemic, e-commerce made up for about 5% of the overall economy. Today, it roughly makes up for about 10%. But whenever you compare it to a more developed economy like the UK, China, or even the United States, those numbers seem to round out at about 30%. Still triple from where we are today. Here's Fede to say his favorite growth metrics in Latin America as well.
Number one is you have still like 75% of transactions in my zip code and around the region in Latin America occurring in cash. Transactions, not volume, but still a very high proportion of daily transactions occurring cash. And then you have like 50% of people roughly either unbanked, so no bank account, or underbanked, which means they have a checking account, but they have no access to loans, to investments, to insurance, to any other product. But I would say on commerce, what are the growth metrics that I'm most excited about? I think it's about increased smartphone and broadband penetration, which has enabled the ability to purchase online for millions of people who weren't able to shop online because they didn't have a PC. So they jumped from 0 to smartphone. So as smartphone penetration quickly approaches the 70s, potentially the 80s or higher, I think that's a huge structural driver of increasing commerce transactions occurring online. But then there's also, I think, a question around technology adoption. So when you look at countries like Brazil or Mexico, their global rank as Facebook users, WhatsApp users, Instagram users, Twitter users is between 1 and 3 or 5. Okay, so you have tech-savvy young people with a demographic dividend in a country where still cash is king for now, and where there's a lot of still upside on moving all that cash transactionality to digital and, increasing electronic payments as a percentage of total through cards or wallets or whatever.
And just to bump in there for another statistic, okay? The average annual growth rate for startups either in the digital banking space or in the business solution space, more along the lines of StoneCo, what we're seeing is massive annual growth rates, the two highest at 57% and 49% respectively in Latin America. Please find me some growth rates that we can find here in America that have that high of growth rates whenever we're talking about banking stocks. So between all of these different trends, there's a reason why I choose Mercado Libre, StoneCo, and especially Nubank whenever actually investing in Latin America. And these companies actually have massive advantages that some people would originally not give them credit for. Like for one, Nubank and Mercado Libre are fully integrated. The full tech stacks are all owned within their own companies, built from the ground up. And during an amazing interview with Marcos Galbrin, the CEO of Mercado Libre, he said this: "We had to solve payment and logistics from zero, and we had to solve it for many countries that were fragmented, and it is much, much harder that way." He's pointing to the 18 different countries that are in different languages, different currencies, different regulations, everything along those lines. That in itself is a moat in itself because people will take massive time and there's no one integrated solution that'll allow you to do all of these things. But Mercado Libre has figured it out.
The way I look at Nubank is if Google Brazil married Capital One, and then you have Nubank. Why I say this is because there's a lot of DNA from Capital One, which you could argue is probably one of the best subprime lenders in the US. When these people got hired from Capital One into Nubank, because Nigel Morris, which is the founder of Capital One, was in the board of Nubank for many years, an investor through QED. The tech stack, when they saw the tech stack, they were like, even Capital One is behind in terms of how sophisticated these guys are.
Now still, the top 5 largest banks in Brazil control over 80% of every financial product that is still delivered. Combined, these banks have become the most profitable in the entire world. Therefore, products like Mercado Pago and Nubank can still continue to thrive because there is such a moat that we could go after. Not to mention also the 35% of transactions that are still being done in cash in Latin America. So with the reduction in prices in the stock market that have been coming of late, I have been continuously increasing my positions in Latin America. And depending on which industry you like the most, there are stocks, whether you like e-commerce, digital banking, or business solutions, all available to you directly on the stock market. Companies that even Berkshire Hathaway is pouring money into, like StoneCo and Nubank. But this doesn't come without its fair bit of caution as well, as every single investment has a ton of risk. But I will leave that to Fede to answer, as not only is he by far the largest professional that I've been able to speak to, either from Mele, Nubank, or any of these other companies, but also he's also a true local there, and he can see what's going on.
But if an investor asks me, what are the risks that you see for these businesses? I would say regulation is number 1, execution is number 2, and then competition would be number 3. I think both for Meli and Nubank, although they've grown substantially, I don't think they're at a point where they have escape velocity. I think if their execution remains like this for the next, 3-4 years, then it's going to be hard to call the Latin American market without having Nubank or Meli, or Nubank and Meli as leaders in the e-commerce and fintech space.
This is overall why I'm investing in Latin America. But is it just Latin America that I'm investing in, or could these companies also expand internationally and potentially even come to the United States?
Nubank doesn't have a commerce business tied to it, and because they are internally becoming increasingly more agile, I think that as they begin to get higher market shares in Brazil, in Colombia, and Mexico over the next 4 or 5 years, they, yes, could move into either the Hispanic market in the US or Africa or Indonesia, because what they're trying to do is to platformize the technology so that with a few $1 million and, setting up the technology and connecting to the credit card processor and the banking system, assuming that they get the regulatory licenses, they could launch a digital bank within months. And I do think it would be the right choice for Nubank, because I think if I think about the TAM beyond Argentina and Latin America, it begins to shrink when you move away from Latin America. So for example, the whole, credit market in Peru is the size of the secured lending in Brazil. But what David always says, the founder of Nubank, is he likes to go into markets where he can fish with dynamite. So if he can't fish with dynamite in Argentina because of the economic situation, the team will have to think where else they can fish with dynamite. My perception that is away from Latin America.